Chuck Oliver. Welcome to this week's Hidden Wealth Review. Well, whether it's Elizabeth Warren's war on wealth, or Bernie Sanders trying to beat up on billionaires, or Biden trying to blow up the inheritances that you'd like to leave your kids and your grandkids, one thing's very clear: there's no debate in a future higher tax rate. And I want to talk to you about friends and neighbors just like yourself, baby boomers and business owners, that now, this being my 25th year, quarter century of having a front row seat across from them and seeing the unnecessary taxes being paid, we did something about it. Brought an entire tax strategy and solution team on our team and saving clients an enormous amount of tax. And this just became that much more important. And I think of the clients that we met with just this week. Gentleman has a much larger income with kind of a quasi buyout of his business. And it doesn't matter whether you have a higher income year, maybe you've got higher income due to maybe this was the year you started your required minimum distributions, whatever it may be, your last dollars earned are being taxed at the highest tax rate. Here's the reality: the highest tax rate is still the lowest we've seen in our tax system. But that could change based on the unknown outcome of next year's election, and change in a big way. Why is that? Well, when you're calling for all these different taxes, right? Eliminating the step up in basis, doubling the capital gains tax rate, a financial tax, a transaction tax. Literally, folks, there's taxes upon taxes, to the point to where in the debates of these Democrats falling all over themselves about who can pitch the next greatest tax on tax, is the argument that they're not being honest with the American people about how these things are going to get paid for and how much more tax you and I are going to get stuck with paying. So much to the tune that one group actually factored that Elizabeth Warren's Medicare for All would cost in excess of $52 trillion over the next 10 years. So you tell me where you think tax rates are going to go. Well, this client, when we talk about return on tax, which is more predictable than a return on our money, had shared, look, Chuck, it's very clear. My highest tax rate this year is going to be at 37%. That's currently the highest federal tax rate, or at least for now, till we figure out next November's election outcome. And as a result of that, he said, you're saving me $37,000 for every $100,000 I don't have in that bracket. Folks, we not only are we saving him $37,000, we're actually saving him over $100,000 of tax just in this year alone. So if you've had a highly appreciated asset sale, a business, a building, a piece of real estate, maybe you had a higher distribution because of the forced requirement of distributions, like some clients were seeing. By eliminating that requirement of distribution, we keep them under the marginal tax bracket mayhem management of paying lesser tax, so that then that doesn't push them into a higher marginal bracket, forcing 85% of their Social Security to be taxed, and then pushing them into the penalty zone box of the Medicare premium penalties for Medicare Part B and D. Folks, learn how. Here's what we decided to do. For those that are serious about still looking to see how much tax you can save for 2019, simply go to taxessaved.com. That's taxessaved.com. Again, taxessaved.com. There's no cost or obligation. It's a complimentary saving tax optimization analysis, but you've got to hurry. Folks, if you remember one thing, remember this: taxes saved is a predictable return on your money through the form of return of your tax. We can't make that promise, right, with the return on money, and we surely don't know the outcome of next year's election, or even after Trump gets reelected, when the next tax-hungry, with punitive tax penalty pushing Democrat decides to want to take more of what you've worked so hard to earn. Position yourself to insulate your income from the IRS. Remove Uncle Sam from your retirement income and avoid the IRS intercepting a big portion of your inheritance. It's key, it's time, and the timing's never been better. Taxessaved.com.